Gold has blasted right through 5,000. Silver blasted right through 100 on Friday. The Shanghai silver price is 123, and that's just sucking the price silver in Comex higher. And you know how I feel about manipulation. All financial markets are manipulated.
The market is repricing silver, trying to find where it needs to be. I don't know where the correct price of silver is, but gold's going to keep rising too. But maybe silver should be 200. Maybe it should be 150 right now. I don't really know. The market is trying to discover what silver should be priced at with $5,000 gold. Really, gold going to 20,000. It's the dollar losing a substantial percentage of its purchasing power, so that the price of everything is going to go up.
Gold and silver are sending loud signals that the global financial system is under stress. With gold surging past 5,000 and silver ripping through 100, the market is clearly repricing precious metals in real time. Analysts like Peter Schiff have long warned that currency debasement would drive hard assets dramatically higher, while Bob Moriarty has repeatedly pointed to distortions between physical and paper markets. The Shanghai silver price near 123 highlights global demand pressure that Comex can't ignore. Whether silver belongs at 150 or 200 is still being discovered, but one trend is clear. As the dollar loses purchasing power, gold and silver prices are being forced much higher. Now, we present the clips from Theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
When people talk about, the cost of living is going up, prices are going up, it's the dollar that's going down. Because if we still had gold as money, if we were still on a constitutional gold standard, prices would be going down. Everything would be getting cheaper, which is exactly what is happening. And that's what used to happen in America once upon a time when we had honest constitutional money. The consumer price index on average fell every year. We had declining prices and we had prosperity. We had a more prosperous society that delivered a more rapid increase in the living standards of the majority of the population back then under a gold standard than we do today. Central banks are buying gold, they're not buying silver, but silver was cheap. And meanwhile, the industrial use case for silver kept improving. There's more and more demand for silver, and there isn't the supply. And so there's been a big price mismatch going on for years. And maybe a lot of that was speculators who were shorting the market, who are no longer able to do that. But the price was really suppressed for a number of reasons. And I just kept saying, look, just buy it. I mean, people were upset that they thought that it was being manipulated. And I was like, well, don't be upset. Just go buy it. If they're doing you a favor, if they're artificially keeping the price of silver down, they're making it easier for you to buy it cheap. So don't complain about it. Take advantage of it. I would tell my clients that for years to buy silver. So now finally the market is repricing silver, trying to find where it needs to be. I don't know where the correct price of silver is, but gold's going to keep rising too. But maybe silver should be 200. Maybe it should be 150 right now. I don't really know. The market is trying to discover what silver should be priced at with $5,000 gold, right? But $5,000 gold is a moving target because gold's not going to stop at $5,000, right? Gold's going a lot higher than $5,000. I used to have a $5,000 forecast over a decade ago, but a lot of money's been printed since then. Because we kicked the can down the road on a dollar crisis a lot longer than I expected, my ultimate target for gold is now a lot higher than I initially expected. So this is not the end of this thing. We're going a lot higher, and we're just really starting to see the dollar break down. And ironically, the catalyst that has finally accelerated the process is Donald Trump. Donald Trump basically forced the world to act in its own interest sooner rather than later, right? With the tariffs, and what happened now recently with Greenland, and the things that he's saying about, how important the U.S. is to the global economy and how the whole world, it only works because of us, and that therefore we could do whatever we want. this is blowing back in his face because the world is really pulling the rug out from under our economy because Trump has it backwards. The world doesn't depend on us. We depend on the world. And we're about to find that out the hard way. Gold is going to go a lot higher. I mean, I think 20,000 is, I mean, anybody can just guess as to where this thing is going. But if gold goes to 20,000, which it obviously, look, given enough time, it will eventually be there. But, if gold goes to 20,000 within the next 5 years, let's say that happens, it's not going to happen in a vacuum, right? The price of copper is not going to stay at $6 a pound, right? It's going a lot higher too. The price of wheat, the price of oil, the price of everything is going to go up. So it's not really gold going to 20,000. It's the dollar losing a substantial percentage of its purchasing power so that the price of everything is going to go up. Now, I think gold will go up, proportionally more than a lot of other products, goods and services, but it's going to be high inflation that drives gold to that level. And you're also going to see the US dollar a lot lower relative to its fiat counterpart. So it's going to be in the context of a major US dollar bear market where you're going to see that kind of appreciation in the price of gold. And it's not going to be just central banks that are buying, but they're going to be buying more. But there's going to be a lot of private demand for gold, not just the industrial use case, and I'm talking silver too, but as an investment, as a store of value, like we haven't seen since the 1970s. You're going to see institutional investors, pension funds, endowments, mutual funds. They're all going to be allocating a portion of their portfolios to gold and silver, to mining equities. Whereas in the past, and including the present, most of these institutional investors have no allocation, zero exposure to precious metals. And so they're going to go from 0 to maybe 5 or 10%, but that is a huge number when you contrast how much that is in totality versus the tiny supply of investable gold and silver or mining equities. And then you're also going to see the retail investor, for the first time probably in decades, getting involved. I mean, sure, there's always been a group of investors, maybe led by me, in recent years, the gold bugs. We've been buying gold and silver. We've been stacking because the events that are going to be transpiring, playing out, are exactly why I've been buying gold and silver and other people. I mean, it's not a surprise to me that we're going to have a dollar crisis. The only surprise is that we've been able to delay it for as long as we have. And that's allowed me to accumulate a bigger position, particularly in the mining stocks, because that's where I've been focusing a lot of my buying. And I probably would have been just better off sticking to all physical silver, but obviously that's just with the benefit of hindsight. But I've got plenty of silver. I got more silver stocks, which, they're up. My silver stocks are up 5X, 6X. But I actually, if you'd have told me a year ago or 2 years ago that silver would be $115 an ounce today, I would have expected my silver stocks to be at least double, if not triple, where they are right now. So, and I still think they're going to get there. It's just that kind of investors are in disbelief of what's happening. And so they're not pricing it in. I think a lot of people just expect the price to crash. And so they're not going to, start factoring in $115 silver into their earnings forecasts for these companies. But you know what? It doesn't even matter. The silver stocks are priced for maybe $50 silver at most. They're not priced even for $100 silver. So it doesn't matter if silver goes down. But the reality is, even if silver pulls back to 100 or 90, a year or two from now, it's going to be much higher than 115. So these companies are just going to make a fortune. And so, I continue to recommend that my clients invest, that they buy. And so you're going to see a lot of new money coming into this sector as the year progresses.
Rising gold and silver prices aren't about the cost of living going up. They reflect the decline of the U.S. dollar's purchasing power. Under a constitutional gold standard, prices historically fell while prosperity rose, delivering higher living standards. Today, central banks are aggressively buying gold, while silver, long undervalued, faces growing industrial demand and limited supply. After years of price suppression, the market is finally repricing silver to align with gold above 5,000 and potentially far higher. As inflation accelerates and the dollar weakens, institutional and retail investors are beginning to reallocate toward gold, silver, and mining stocks. This shift marks the early stages of a major global monetary reset. Let's get back to the interview.
You look at the price of silver in the chart and the history, and you say, I like silver. And you go buy one contract, 5,000 ounces of silver. And the next day, California, Washington, Oregon fall into the ocean because of a big fault. Silver goes up $100. So you've got 5,000 ounce contract. You've got a $100 increase in the value of silver in one day. What if you're wrong? What if you buy a contract of silver and the price goes down? You lose money. That's market risk, and that's the risk everybody pays attention to. But somebody is on the other side of the trade. If you multiply $100 an ounce times 5,000 ounces, you get a very big number.
5 million.
What if the counterparty
500
cannot belly up to the bar? Counterparty risk right now is probably greater than market risk. Silver's up $10. That's incredible. Okay, I own a lot of silver. I was buying silver under $4.50 an ounce. For it to go up $10 in a day, I never even anticipated anything like that. So bad things are happening behind the scenes, and we think silver going up $10 in a day is a good thing, but it actually could be a very dangerous thing. However, if gold's expensive and silver's expensive and platinum's expensive and palladium's expensive, and now copper is turned into a precious metal.
Silver's explosive price moves highlight a deeper risk beyond simple market volatility. When silver jumps $10 or even $100 in a day, leveraged contracts magnify gains and potential failures. Buying a 5,000-ounce futures contract isn't just a bet on price direction. It exposes investors to counterparty risk, which may now exceed market risk. If prices surge too fast, the losing side may not be able to settle. That's a warning sign, not just a celebration. With gold, silver, platinum, palladium, and even copper behaving like monetary metals, the system is signaling stress. Rapid price spikes suggest instability behind the scenes, pointing to deeper cracks in global financial markets. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.